So it's a lot of moving parts that frankly, unless you're a professional, you don't want to deal with it. By us having accurate data and being transparent about it, customers can rest easy knowing that all they have to do is just sign off. So to determine taxability, we first have to classify what the product is, and sometimes that's easier said than done. Sometimes it's something simple like, it's barbecue sauce. That's a grocery food item. Sometimes, especially when it comes to software, it can be complicated because it could be SaaS, it could be just a computer program. Is it pre-written? Is it something that's custom? So that first step is really important because it impacts the taxability. And once we know what that product is, we look to statutes and state publications to see how each state taxes or doesn't tax the product that we are researching. We rely on primary sources, so our go-to is always going to be the statute because that is the most valid source of information. But a state usually also provides a publication, or they have a website where they put the same information but in a little bit easier form for people to digest. And especially some of the more complicated taxes, you really want to rely on those extra publications. We also look at private letter rulings, which some states publish. Sometimes you have to really search for them. So between the statutes themselves and the state's publications and websites, we have a primary source that we can rely on. Our tax research team is made up of attorneys, so we review each other's work to make sure that our understanding is correct and we haven't had, like a Monday morning where we just read something the wrong way. Those are the tricky ones. They can actually be quite fun because it's a puzzle. Like you say, they're in a gray area. So first and foremost, it is up to the client to tell us what their product is and how they would classify it. We can help them a little bit with, sort of giving them guidance of like, okay, well, this is what it means to be SaaS, or this is what is considered a soda. You'd be surprised how often it actually comes up. So we give some guidance, but ultimately the client decides what the product is. And then we again try to look for direct guidance from the state. Unfortunately, sometimes based on the product, we don't have that. And so we have to look holistically at how a state treats a product or a service that is not specifically mentioned as either taxable or exempt. A lot of states fall in the category of taxing something unless there is a specific exception. But there are a few states who take the opposite view and say that in general, services are exempt unless they're specifically taxable. So we have to look at each state and see how that product would be treated in that state because we cannot just assume that it will always be taxable. We just kind of have to see how the state handles a great product or service. I like to think that we support everybody because we help build the product. I mean, we have a great company and each area of the company is equally important. So we kind of touch some areas more directly, like with engineering. We do the research and then we tell them what we need them to build in order to support whatever tax we are, or the sales tax and the product that we're covering. We support filing because we provide information to them about tax changes, where on the form something is, which we're now using to automate. I would say a large portion of our support really goes with customer service and sales teams because they sometimes need to know, can we support this customer? We might not have a product taxability code that is very clear, but maybe the customer isn't very clear on their product. And once they speak with us, they realize, like, you know what? I actually am selling SaaS, and you guys support SaaS. So we sort of are the foundation, and we try to help everybody, from engineering to filing to customer support to sales. Well, we have a monthly maintenance cycle. So each month we go through maintenance process and we look at publications that the states have. We look at our own tracking software to see what changes we have come across. And then we also do manual searches because we know that some states are not the best revealing the information up ahead of time. So each month we go through the same process to make sure that we catch all of the taxability, the rate, and the boundary changes. Now, sometimes states are a little bit late on those. So even though we go through it monthly, it doesn't really ever end. So right now, if we get something at the end of the month, we still have to know about it and implement it as soon as we can, even though our monthly cycle technically ended. It's really based on effective date. Most of the time we are ahead of the curve, but once in a while, especially if we have a new vertical, we might be behind, be like, oh, this vertical that we just implemented also has a change that is happening like right now. So based on effective date, we prioritize that. And then if something is past due, that also takes priority. So if you think about a plate of pancakes, like not the meat sack of pancakes, but just like haphazardly thrown pancakes, that's kind of like the boundaries that impact taxes. And our engine is able to pinpoint exactly where in that large plate of pancakes, which layers and taxes are relevant to the pinpoint we care about. The pinpoint usually being an address of the buyer. So we can see what the state rate is, what the county rate is, and then if there are any city or special district rates that have sales taxes that impact that transaction on that address. A geographic information system, and it is, I would argue, half of what we really care about. The other half is the rates, but it is that important where the rates don't matter if we don't know where they go, but the boundaries don't matter if we don't have rates to go with them. So it really is a huge cornerstone of what we do. And we have those we have those boundaries because unfortunately our tax system is such that our geographical boundaries are not always the same as the tax boundary. So we have our state layer, which we know those are great, perfect boundaries that we have established, and we have the counties. Wonderful. But after that, it gets really complicated because you can have an unincorporated part of the county that has a different rate than the rest of the county. So you need to know what that unincorporated part is. And they're not all touching each other. You can have pinholes, kind of like Swiss cheese, where you have the cities, and then everything else outside of that is unincorporated. So we use the JS system to map and maintain those boundaries because, of course, they change as well. Thank you, California, recently. So as those boundaries change, we need to know how they change and where they are so that for the next transaction, we can have an accurate tax calculation. We cannot rely on a single source because each state is different and it can be tricky. And so we rely, I would say, on about 3 or 4 tactics. The first is each state issues a publication. Some states do it from the state level where they tell you all of the cities and county changes. Some states like Louisiana do it on an individual level, so you have to go through each parish to see if there are any changes, which makes maintenance take longer. And so we rely on those publications. Some of them are issued late, which throws a wrench in our otherwise smooth system. But we also have tracking software to make sure that any notices that pop up on other state websites that we know about alert us to any changes that might be outside of that publication, like if there's a new city, or not a new city, but a new city sales tax. Then we also do our manual searches when we know that there are certain states, like Louisiana, where we have to put eyes on the website. And then also Louisiana, we have emails for people who work for that parish that we email to make sure that we haven't missed anything because, you know, it's bureaucracy. Sometimes it takes a while to update a website and we don't want to rely on that even though there is a change that is coming. It's just not published yet. So between the state publications, the tracking software, our manual searches, and those emails that we dole out to addresses that we know, we try to stay on top of it. Kind of like our product taxability, we have a review process to make sure that the change we meant to make is the change that comes through on the other end of our engine. The biggest one really is that we try to make sure no change is made single-handedly on our end. We do a good job of capturing and knowing about the changes that are coming and existing, from state to state. But that's only part of it. We also qualify people who know certain problem states or know that some work will be more time consuming. So we rely on their expertise about knowing which states are just take longer to get information out of. Even now we've had state updates where we know boundaries have changed and states have not supplied the boundaries, but we know they're changed. And so we really just try to rely on our internal system of having that checks and balances process of two eyes on something to make sure that it's correct. Well, the first one is a huge headache and lots of stress for everybody involved. And depending on how bad the mistake is, that can lead to fines or audits or a loss of business, both from Zamp's perspective and also from client's perspective, because anytime you have a tax issue, you're taking away energy and time from doing business to doing something tax related, which isn't really a client's business. It's our business. And so when we have a tax issue, it's all hands on deck to figure out what the issue is and the best way to fix it going forward. And if there is a retroactive remedy that we can do to sort of patch up the problem while we sort everything out. I think when you know that you can rely on Zamp, you don't have to worry about your taxes. So we have that motto of, we make tax less taxing, but it's a real thing because there's so much going on in the tax space. Even if you sell one product, you still have to worry about all of the states you go into. You have to worry about, have you reached nexus? Great. Now, are you collecting the right amount of sales tax? Cool. Well, now you have to file a return. So it's a lot of moving parts that, frankly, unless you're a professional, you don't want to deal with it. Like, if you're not a tax person, it's not your forte. And it shouldn't be, And so I think by us having accurate data and being transparent about it, customers can rest easy knowing that all they have to do is just sign off. They sign up and then they sign off, and that's great. So before I came to Zamp, and actually a couple of years before that, I used to work on the side of clients who had not been paying their taxes correctly. So I was part of a couple of audits, and let me tell you, there's nothing more an auditor hates than just a box full of unorganized paper, because that's a headache. Now, what Zamp provides is clarity and organization, and auditors would love that if they ever audited any of our clients, because we can give them the data in a clear and organized method, and that's it. Like, it erases all of the extra work they would have to go through to try to puzzle together what happened. And on our end, it also makes it easier because ahead of that, we already know if there are any issues that we need to fix, or if we can provide substance for whatever the question is in that audit. Biggest challenge is the states themselves because some states, a small number of them, hide the ball, to be frank with you. Like, they will publish late, or they will have an amendment, but they don't tell you that it's an amendment. They just kind of switch out the PDF, and you're like, am I crazy? Or did this used to say 4%, and now it says 4.5? So that's really the hardest part, honestly, is just getting that transparency and warning from the states. But aside from that, it's also the amount of information that's out there that we have to wade through to get the correct information. We have 45 states that have a state sales tax, and then we also have DC. And then we have Alaska, which has local sales tax, but no state level tax. So we have 47 jurisdictions that we have to maintain. And that's a large number when each of them can publish a number of updates throughout the year. So for the example of food, even though it's different, it's taxed differently in every state and also depends on the product, we provide that information. So if you have a soda item, for example, depending on the state, that's taxable, exempt, or taxed at an alternate rate. And you need to know that information. But unless you do that research on 47 different jurisdictions, you're not going to know. We make it feasible by categorizing the products. Our product taxability is based on categories rather than the product itself. So you might be selling hundreds of different clothing items, but what we care about from a taxability perspective is whether that item is swimwear or formal wear. Does it have animal fur? Is it formal? Those are the categories that actually impact taxability. And those are only categories that we care about, because if it doesn't impact taxability, we don't care if the sweater is blue, green, it doesn't matter. And so you can have thousands of products, but as long as we categorize them based on the categories that impact tax, it's an easy system to manage. When the company first started, we had a lot more codes because, like all of our competitors, we wanted to make sure that we're capturing everything. What we have recently realized is that simplicity is better. So we have gone back to the drawing board and reduced the number of codes that we support, not the number of products we support. Because again, instead of looking at taxability per product, we're looking at taxability per category, and only when that category matters by impacting the taxability of an item. For example, when it comes to drinks, oftentimes the number one determination of whether a drink or a beverage is considered a taxable soda is whether there is a sweetener added. And so that, like, the definition of soda might vary from a couple of states, but whether a beverage is carbonated matters, whether it's sweetened, whether there's a artificial or natural flavor, those are things that matter. So we don't need to categorize each soda. We just need to categorize whether this specific beverage is sweetened, carbonated, etc. I think a lot of competitors are trying to represent how complicated tax is in a maybe more extreme format that it needs to be represented. Tax is complicated, but it doesn't have to be as complicated as some of our competitors make it out to be. But going back to our method of determining taxability product based on its category, there are competitors who, and I used to work at one of them, will have 15 different product taxability codes, even though all 15 are really about one product and they have the same taxability. So from a customer perspective, you think that what you're offering is really complicated because you have 15 different product taxability codes. And this is actually something that came up a couple months ago when we had a customer switch to us, and they were surprised. They're like, why is everything SaaS? And I was like, because that's what it is. Like you have several offerings, but they're all SaaS. And they were confused because their previous supplier, even though they categorized things as SaaS, they had different categories of SaaS. But there are only two categories, which is business to consumer and business to business. Those are the only categories that impact taxability. Everything else, kind of like the shirt example, it doesn't matter if the shirt is blue, green, small, large, it doesn't matter. It's a shirt. And so the same thing with SaaS. It's either business to business, business to consumer. Everything else, if it's still SaaS, doesn't matter. The biggest one I want to say is transparency, because we actually provide information to our customers to support our tax findings, whether it's the rate or the taxability determination. We have that available both internally to our teams, so the sales team, the customer support team, anybody can look at that information. And they can then provide it to that customer so that if the customer has a question about, hey, like my previous provider or my attorney friend, whoever, said that like this should be exempt here and you guys have it as taxable, why is that? And we can provide a legal reason, like I'm an attorney, the rest of the team's an attorney, a legal reason and analysis to support our finding and determination. And I think that gives a great confidence to our customer.